Insights in the news shaping the markets. For that, we welcome in Rebecca Walser's with us, President Walser Wealth Management. So glad you're here. Let's get some insights in the news shaping the markets. For that, we welcome in Rebecca Walser's with us, President Walser Wealth Management. So glad you're here.
Thanks,
so yesterday was so exciting. You know, we got the unchanged, but I think when we heard about the runoff of the balance sheet being slowed, it was something we were waiting to hear, but maybe not till June. And the markets took off and the Dow was up 400 points. Then we sort of fizzled out. I mean, what did you make of yesterday?
Yeah, well, I think that we expected, Nicole, that there was going to be a pause. We were going to hold rates higher for longer. I should say lower for longer, right? But it's now higher for longer. But that was a surprise that, you know, even though he's saying inflation is still sticky and PCE came in hotter last week, the fact is that this is accommodative. The fact that they are reducing allowing the maturities to expire of $60 billion a month, and starting next month in June, it will be tapered back to $25 billion a month. That is accommodative, Nicole. And so that lets us know that there's some underlying data that the Fed is seeing, that maybe the market or the economy is kind of slowing. GDP, particularly of Q1 of 1.6 when we expected a lot higher. And then obviously inflation being sticky with GDP coming down. You could look into a stagflation type situation. And I know Powell said he doesn't see that we're headed towards stagflation. But there is something to be said about the fact that they did pull back quantitative tightening and become more accommodative.
You know, it was interesting, too, because there were still a lot of talks about the potential for a hike. And he sort of took that off the table, that they're really at this peak, that they are, you know, sufficiently restrictive at this point. I'm paraphrasing, but I think that gave a little relief to the market.
Yeah, in fact, when he was talking, all three indexes, to your point, basically jumped 1% because that was, you know, I listened to how he said it, and if you listen to him, he didn't say it with a lot of conviction. He said it's unlikely that we will be seeing a hike, so it wasn't super convincing on the way he said it, but he did say it's unlikely, and because of the hot PCE, you were seeing people saying maybe we could have a hike. So that's pretty much off the table. He said they would have to really get substantive data, Nicole, to show that their policy is not restrictive enough to tap down inflation. So I don't think that a hike is, you know, going to come. The market liked it, but then I think the market also realized, okay, we like this, but then we still have, you know, low GDP, high sticky inflation, and so we're not going to get cuts anytime soon. In fact, even for a September cut, the probability now on CME watch is less than 50%.
At 55 right now, so I know it fluctuates, but you're right, it's around that 50% mark. So right now, at this moment, 55.1. The November is the most likely, 68.8. That is nothing like what we were seeing earlier in the year. Remember, it was like June, July, 99.
I know.
You know, everything's sort of been washed away. So we're in this sort of wait and see mode, and markets sort of like that. They don't necessarily love when the cuts start coming, because then that could also mean something else, like a slower economy.
Exactly.
So let's talk about your market strategy. I know you say you still like some of these tech names, like you're watching NVIDIA and SMCI, for example. Are those names you like? Are they part of a theme for your investing strategy?
Well, I think they have a long runway. And honestly, you know, if we go into a stagflation type situation, which I'm not saying that we are, but if we do, you're going to look at the consumer staples, utilities, things that people have to buy no matter what they cost, because that's how we live. So you would really go into more, you know, resilient type of sectors. But for the long-term growth prospects, if you're not needing to really have growth immediately and you can do more long-term, it is important to buy into these long-term runways that we have with NVIDIA, with, you know, SMI, you know, so that we can see that the long-term potential is there, even though the market, I think, is going to really have a hard time in 2024 still.
So if there's room for those to run over the long term, you also are watching some of the other sectors. In addition to tech, right? So what else do you like?
Well, I personally believe that we're going to see the rest of the year get a little more bumpy, because the closer we get to election, you know, these campus riots, if that contagion's out into the bigger society, people, that affects consumer sentiment, Nicole. And you know, and I know that 70% of our economy is based on spending. So if people start to get like, what's happening with our country? It's an election year. This is getting crazy. And they start to really pull back, and we'll see that with the Michigan survey, obviously. Then I think that the market does have problems. And just if we get craziness in the rest of the year with with problems. So I still am expecting 2024 to actually have market disruption. And for that reason, I would either stay with commodities and have the safer kind of hard asset kind of play right now. Otherwise, like I said, I'm looking for the longer term runway of tech, but it won't be something that will deliver maybe this year.
So does that mean gold, or
Absolutely.
how about oil and energy?
I'm a fan of gold. I'm a huge fan of gold and silver. I think silver is very, very undervalued right now for all of its uses.
Yeah.
But oil is going to be interesting because we have a Saudi Arabia, U.S. situation right now with weapons, and we have Saudi Arabia having a security agreement with Russia for the first time since 2022. So we have to see how that all plays out. Oil right now has obviously come down today. It's tapped down. But and also if the world goes into global economic sort of recession, then there will be less demand for oil. So we'll see how that goes.
It's interesting. I mean, when I saw oil today, it's $78. I mean, we haven't seen that in some time. So,
and the Biden administration basically was supposed to buy reserves, refill our reserves in August and September, but they had a price limit of Nicole of 79. So they said now we can't do it. So maybe if it keeps going down, we can start refilling our strategic petroleum reserve again.
Yeah, and I was asking about that actually because I too worry about our strategic petroleum reserves. We really dug into that, and the response that I got from an oil analyst at that time was, we're pumping out so much oil here that we don't need it in the same way anymore. And I said, oh, okay.
Interesting.
It's interesting. I mean, I don't know. But in the meantime, our exports yesterday were lower. I mean, I remember seeing that yesterday, and I was thinking to myself that, there was a big build, lower refinery runs, and exports fell.
Yeah.
So there is sort of a demand issue, and I wonder what kind of global slowing we may be seeing.
Yeah.
What else is on your mind? I mean, talk more about the consumer. They're facing an inflationary environment. You also have stagflation on the mind. What does this mean for the consumer?
Well, stagflation is obviously a lot more difficult for the Federal Reserve to handle because they're two competing things. You've got inflation still tracking higher, but you also have economic, actual activity depressed. So if you try to tap down inflation, you're going to further depress economic activity. If you try to stimulate economic activity that's accommodative, that will only make inflation worse. So stagflation really is the worst position for this Fed to be in. And so let's hope that Powell is right and that we're not entering into that kind of tailspin. But I am a lot more concerned on the macroeconomic level. Russia sort of kind of saying that they're declaring economic war on the United States because the Repo Act, which was a part of the federal stimulus, basically says that we can now confiscate the Russian assets that are in U.S. dollars. And that is a big, huge problem, Nicole, and that is going to be retaliated against. And so there's a lot of macroeconomic factors that are also going to impact this year.
Yeah, without a doubt, those global stories that sort of are a bit of an overhang to your point. Rebecca Walser, great to see you.
Good to see you, Nicole.
Love when you're on. Thank you so much. Rebecca
you.
Walser of Walser Wealth Management. Thank you so much.